Oh, I got a pop.
Record to this computer. Did a record thing come up at the top of the screen? Okay, good.
Yeah.
All right. So we are recording. I don't know where I'll post this. It might just be on my YouTube channel, but it might be in the
So I lost
Traders
my
chat.
camera. Just from moving, I lost my camera.
Yeah, I don't know what happened there. We saw you and then we didn't see you, and I don't know what happened. I just saw
Oh,
Alexis pop on
mm,
and then she popped off, and I
trying
know.
to
Oh, welcome, Jim. I know. Yeah,
see.
maybe sign out and sign back in again, Sharon. Maybe that's the only way to do it. I really don't know what's going on there. Um, but let's see if I can share. I'll start off by answering. Oh no, I've got to wait for Sharon to come on now because it was her question. Well, let's see if she gets back on. Hi, Cheney. How are you? I thought you were off somewhere, Cheney.
No, we leave in a couple of hours.
Oh, okay. Okay,
Yeah,
cool.
yeah,
Yeah.
for
Oh.
sure. Just wrapping up loose ends around here.
I gotcha. I understand.
Yeah. Seeing how I make this a priority.
Yeah, they're very good. Yeah, no problem. Yeah, Sharon just popped off, and I don't know whether she jumped back on again. Who else is? Oh, Alexis got on. Good, good, good. Hi, Alexis. How you doing? Good to see you. Let's see. Okay, Sharon's back. Still no camera, Sharon, but no big deal. I wanted to show you. Can you see me okay, Sharon? Because I'm going to try and share that compound calculator.
Yes, I can see you perfectly, but rather than fiddle with it, I'm just gonna listen in, if
Yeah,
that's
yeah,
okay
no
today.
problem.
Okay.
All right, I just want to show this to you quickly, and maybe it'll help other people as well. I just want to make sure that I can share it. Let's see if I can. This one, iPad, iPhone via cable. Allow accessory to connect. Allow. Okay, there we go. Can everyone see that? Have I lost everyone? Can everyone see that?
Yep.
Yes, thanks.
Okay. So that is the compound calculator. This is the one I use. It's at the thecalculatorsite.com. You can use whichever one you want, doesn't matter. Okay. The important thing is for you, Sharon, if you're showing this to people, you've got to click. Can you see my cursor moving around?
Yep.
Okay. So you've got to click here,
Yes.
daily compounding. Okay. Oh, actually, the cursor works. I got to press my finger. So you got to go to daily compounding. You got to click on that one. If you don't, it doesn't work. Okay.
Uh,
And then what you do is you put your currency in here. Obviously, mine's dollar. And I will put in here, let's say $10,000. Doesn't matter. Could be 1,000, could be 10,000, could be 25,000 if you're a funded trader account. Doesn't matter. And then right here on the interest rate, we're going to put 1% just to make it easy, guys. Okay. 1%. And then here you have it on daily because we're trading every day. And right here, usually I will put, 6 months or 1 year, whatever you want to do. In this case, let's just put 1 year. Okay. And additional contributions, I'm going to leave it at none. So what that means is if you were going to add, so let's say you had a cash account and you had 500 in it, and then later on you were going to add in, another 500 or another 500 from your job or whatever it is. That's how you would put it in there. And I'm not going to do withdrawals because obviously withdrawals are up to you. What do you want to take out? And I'll tell you, how I do it. And so right here, now you've got everything that you want here. You, you've got to make sure you do that. Daily compounding, your currency, your amount, your interest rate. The interest rate there is what you anticipate to make on your trading account on a daily basis. Okay, so if it's $10,000, your goal is to make $100 on that amount. Does everyone understand that? That's your goal. If you think you're going to put $50 on
Yeah.
a $10,000 account, put 0.5% in there. Okay, whatever you think, this is your figure, not mine. I'm just doing this by way of example, and I'm keeping it at round figures because it's easier for my little brain to keep up with my mouth, which is hard enough as it is, as you know, because I get so excited. Um, and I'm just going to do it over 1 year. Again, you can put in months, you can put in days, whatever you might be. And here, include all days of the week. Now, I'm not going to do that because, so I put no there, because I usually only trade, or I count my trading as Monday through Friday. Obviously, I do trade on Saturday and Sunday. But again, by way of example, this is 5 days. If you only trade 3 days or 2 days, like let's say you can only trade at the weekend and you're only trading crypto, then you might just have 2 days, Saturday and Sunday. Or maybe you've got one day off in the week and you'll trade Wednesday, Saturday, and Sunday. Again, this is for you, not for me. This is your plan here. So days to include are here. There's a big difference between 5 days and 3 days. I will show you that in a minute because it will incentivize you to trade consistently. And by consistently meaning if your trading plan says you're going to trade Monday through Friday, I'll show you why that's important. Okay. No additional contributions. We're just going to leave today as a start date. Doesn't really matter. When we hit calculate, we are going to see the result of these calculations from calculatorsite.com, not from me. So after 1 year, your $10,000 will turn into $134,000. That's on 1%. If you grow your account 1%. Now, the question Sharon had was, is that compounding? Is it what is it? So it is both. So what that means is what we can break down here. When you scroll down a little bit further, you can see the breakdown here. And in this case, I've got it monthly. And so in the first month, June, this month, because we only got a few days left, we're going to make $300, total earnings 300. So you add that to the 10,000. So this is not interest rate that you're gaining from anybody else. It's not like banking. It's not like the interest that the bank gives you on your deposit. This is your interest that you're trading. So when you start in June, you're trading with a $10,000 account. By the end of June, you should have made $300. And so when you start off at the beginning of July, the 1st of July, you're now trading with $10,300. You get that? And so that's where your compounding comes on. So $10,300 and growing your account 1% a day means at the end of that full month in July, you would have made $2,600. You add the $2,600 to the $300 and you get $2,900. So now 10,000 plus 2,900 is 12,952. At the beginning of August, you are now trading with 12,952. 1% a day will make you 3,000. 3,000 plus 2,900 is 5,900. You're now trading with 15,000. As it goes up, it starts getting fantastic, obviously down here. But let me show you what that means on a daily basis so you understand how tiny, 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 little tiny trades get you to this stupid big number. I'm not saying you're going to get to this number. But the potential is there to grow your account if you trade 5 days a week, if you manage to get 1% a day out of your trading account, if you don't withdraw any money. So when you look at the daily account right here, let me press that and show you daily. You will see tomorrow you will make $100. That's 1% of 10,000. You add that onto 10,000. So the next day on Friday, you're going to, is it Friday? Yeah. Your next day, you're going to start with 10,100. So now your 1% is now $101. So now you've got 101 plus 100, 201. Now you're trading with $10,200. And so it goes on. Each day it grows 10,300, 10,400, 10,500, 10,600, 10,700, because you're growing it exponentially. And it's the 1% on the total value of your account because you're not withdrawing anything. That's how it grows, and you can see it growing, growing, growing. It goes to 11, it goes to 12, but after a while it starts accelerating. 14, 15, 16, 17, 18. This is week by week now. This is the calculator site. You can go and plug your own numbers in here and play around with it, but you start seeing, obviously, the compounding effect starts kicking in. And now you're not talking about, 10, 15,000. Now you're already up in the 70, 80,000. Okay, is that clear for everyone?
Yes, thanks.
That's why I get excited. I'll just
Yes,
show you
thank
one more thing though, guys. Look at this, just to show you one more thing. Remember, we're $10,000 account and we're trading 5 days a week, correct? And our amount up to here, remember this amount. This is after 1 year at 1% trading 5 days a week. Okay. Let me just show you what triggered in my mind why I need to trade consistently. And I went to trading 5 days a week, no matter what. Ready for this, guys? Write this number down in front of you, 134. I'm going to take 2 days away. Doesn't matter which two. Let's say I take Monday and Friday away. A lot of people don't like trading Monday and Friday. We've gone to 3 days. Right. See that number there? See that number there, guys? I'm going to hit calculate now. All I've done was change that. I'm going to hit calculate. These are not promises. These are not projections. I'm not promising you you're going to make this. I'm just showing you the difference between being consistent on 5 days a week or only making it 3 days a week because you're hungover, you can't be bothered, you didn't get out of bed when the alarm went off, whatever silly reason you give yourself, this is how much it's costing you. 134,000 if you're trading 5 days a week for a year. I'm going to hit calculate. What's that number now?
Wow.
So can you see how that motivated me from trading from 3 days a week to 5 days a week? People say they can't get up early to trade. They miss a day. And I say, well, let me just show you what 5 days a week does. It's 134,000, and just dropping it to 3 days a week. See that?
Wow.
No income claims here. I'm not saying you're going to do this. I'm just saying this is what you have to realize. To me, what that did is I was not a morning person. I hated mornings. I'm a nighttime person, always have been. But I started getting up earlier and earlier and earlier. You all know I get up at 4:44 every morning now to be on the charts because of this calculation. That's what motivated me. Your motivation might be different, but that's what motivated me. Why do I want to leave nearly $90,000 on the table potentially in 12 months? If you play around with this, you put it over 3 years and your mind will be blown. You won't even understand. Well, let me blow your mind right now. I love blowing people's minds. Okay, so all we're going to do here, we're going to go back to 5 days there. See, 5 days. We're going to leave that the same. Going to leave that the same, leave that the same. All we're going to do, is we're going to change that to 3 years. You won't believe this, guys, because I didn't believe it, but I do now. Okay, done. Okay, remember the amounts we told you over 1 year? Look at this silly amount now. 3 years, consistent.
What?
Yeah, exactly. What? When
Wow.
you talk to people, but more importantly, when you talk to yourself, guys, these are the kind of things you need to understand fully in a mindset way as to what the potential is here to change life. We talk about trading can be life changing. We talk about generational wealth. We talk about all these big shots on the doing the network marketing side and everything. Guys, 85% of our people just trade. Yes, I do the network marketing side as well. If I didn't, do you think I'm worried? If I'm just going to trade, do you think that this is motivation enough for me?
Absolutely.
So that's what motivates me. I'm not saying I'm not anywhere near this, obviously. Otherwise, I'd be, in the next cabin to Emma in Fiji with my dangling my feet in the water. But that is my motivation, and that kind of money is life changing. That my whatever your goals and dreams are, whoever you want to help, whatever you want to do, that's going to enable you to do it. So anyway, that's my little bit there. I just wanted to show you. Was that helpful to anyone? Did that open anybody's eyes there?
Oh yeah,
Oh,
excellent.
absolutely.
And remember, that's not me. Go to thecalculatorsite.com and play around with it yourself. Play
What's
around
the
with it yourself. Show other people if you want to, Sharon. It is
John,
absolutely mind-blowing, this stuff. It's
so
crazy.
just a question, if you don't mind. Sorry for
Yeah.
the interruption. So obviously, we are going to take money out, right, at some point, or do
Yeah.
you? Because you don't just leave it there. So you'll withdraw, say once a month or once every 3 months or whatever. That stops the obviously, just readjusts, right?
Yeah, so
I mean,
again, you can
start.
do it. You can do it on the calculator site as well. So again, just go to your calculator site here. Let's see if that pops up. Your screen is there. We go. So what you do is additional deposit amount. Let's see. Let me see. Where is it? Current. Let's go daily compounding. Yeah, principal amount, daily reinvest. Yeah, you have to do it. You have to do it on the reinvest side. So let's say you had 10,000 in there. Your interest rate was 1%. You had it over 1 year. No, you're doing it 5 days a week. You have to play around with this one here, daily reinvest rate. So what you would do is, let's say you were taking 10% out. You can't, it doesn't really, oh, hold on. Additional contribute withdrawals. Let's see what withdrawals.
Oh, okay.
Hold on. Yeah, additional
Oh,
withdrawals. So
okay.
let's say so you could do it two ways. You can do the daily reinvest rate here. This means 100%. That means everything you make, you're reinvesting right back in. You can change that and say, okay, I'm going to take 10% out.
Okay.
Well, actually, that wouldn't work, would it? Because that's daily. We're only making 1% a day. So taking 10% a day out, it's not going to work. Yeah, I don't know how that one works.
But you could do that reinvest down at the bottom, right?
Yeah, you could do you could probably do that withdrawals there. Additional
Yeah.
withdrawals. Let's say you decided to um, let's say let's leave it a monthly. Let's say you decided to take out, I don't know how you can scale it. Let's see what happens if you put 500 a month out. I guess what you would do is you would keep changing this as you went up. Let's just see what happens.
I think you need to change it to 100% back up on the other one though, John.
Oh, did I leave that at 90? Oh, I did. You're right. Okay. So yeah, so it changed from 130,000 to 100,000, withdrawing $500 a month.
Still
Okay.
good.
Yeah,
I'd be happy with that.
still good. Now the reason I started at $500 is because when you start the calculation, you've only got $10,000 in there. When you get up to the 60, 70, $80,000, obviously you can be withdrawing a lot more money, but it doesn't offer you the flexibility to put in different amounts at different times of the year.
Okay.
Okay. So what I think you would do then is, let's just do this calculation. Hopefully I'm not boring anyone. Let's say, let's change it here. So instead of doing 1 year, let's say we do 6 months. Okay. And let's say we are going to leave everything else in there. We're going to do 5 days a week. We're going to, for the first 6 months, we're going to withdraw $500 a month. Is that a reasonable? Does that sound reasonable?
I think so.
As an example,
Mhm.
okay? Or we could do it 3 months, but let's do it 6 months. I don't know how this is going to go. And then when we hit calculate, over 6 months, okay, we're going to be that 30,000. But what we want to look at here is over 30 months, our amount here, even withdrawing, remember our amount at the top here is 30,192, right? So let's say 30,000. When we go down here at the bottom of the 6 months, there's our 30,000, right? That's withdrawing 500 a month, right? So let's say in the first month, which is only a few days left, so we can't really count that. Hold on a minute. Let me just change this, guys, because let's just keep it nice, and let's just put it June, July 1.
I think we should just let it grow for a year and then
Well, let's just see. Okay, so now we're on July 1, just so we have full months. We're not worried about
Right.
those few days, okay? Let's
Right.
hit calculate. This will go up a little bit more, I think, because now we've got 6 full months. Just a little bit, okay? That's taking out 500. Let's go down here, and let's say, so in July we took out 500. We still made 12,500. In August we took out 500. We still made 47, 14,700. And in 3 months' time, even withdrawing 500, 500, 500, we still got 17,700 left, right? So let's go back. Remember that amount, 17,700 in 3 months, right? So let's now go. Let's put that up to 1,000, and let's put that up to 17,700. We all agreed that was the amount. And now we hit done. We're still doing it over 6 months. Let's calculate. So now what happened is, look, our 17,000 grew. I didn't change the date, but imagine that 3 months further down the road. We're still growing it, 22,000. Now we're withdrawing $1,000 a month, right? So now the next 3 months, we're drawing 1,000, 1,000, 1,000. We still have 31,000 in the account, right? And we withdrew $500 a month the first 3 months, $1,000 a month the next 3 months, and we still have 31,000 in there. See that? So that's how you have to calculate it, is doing it like that. Probably over every 3 months is probably a better way to do it. And then if we go back here at the beginning, look, October, we got 31,000. Let's do this one last time. So now we're at 31,000, right? And we're doing, let's change that to 3 months. let's change that to, what did I say? October 1st? Let's see, July, August, September, that's the first 3 months. October, November, December. So actually it's January. Okay. January 1st. So the first 3 months, July, August, September, you withdrew 500 a month, right? July, August, September. October, November, December, you withdrew $1,000 a month. Now let's see, we withdraw. How much you want to withdraw now? 2,000, 3,000? What do you say? 3,000?
Yeah, 3,000.
All right. So now
Okay.
we're withdrawing 3,000 a month. So by January 1, now you're withdrawing 3,000. Let's calculate. Obviously, this figure's not going up as much, but we're still growing our account. Look at this. We started with our 3,000.
All I know
Okay.
is I
We're
need an
still
account.
going up, right? And still at the end of that, let's do it weekly so that it's a little bit, there we go. We're still getting 47,000, and now all this time we're withdrawing 3,000 a month. And your account, remember, you started with $10,000, guys, right? And within less than a year, you've got nearly 50,000 in your account, and now you're withdrawing 3,000 a month. See how that works? So play around with that calculator. I didn't want to spend so much time on it, but I get excited myself when I do all that. So did that make sense?
Very exciting. Thank you.
Very powerful tool.
Yeah. So go and play around with that yourselves, guys. Plug in your own numbers. I'm just making numbers up. You can plug them in however you want and see how that works. If you want to show anyone else, that's how it works, guys. Any other questions on that?
What's the saying? What would you rather have, a penny per day or $1 million?
That's right.
Penny per day for 30 days or something,
Okay.
or $1 million, and that compound calculator is just amazing.
Yeah, that's how it compounds. The beauty of it is you're not relying on somebody else to give you that money. And you know banks are going to give you whatever they're giving you now, 4% a month. So we're just looking at 1% a day on our trading account. And obviously those results are up to you as well. If you're starting with 10,000, can you make $100 a day? That's basically it. Because remember, guys, a $10,000 account and you're doing 1% a day, that can be, let's say it's 3 trades to make you 1%. It's the same 3 trades whether you've got a $1,000 account, a $10,000 account, or a $100,000 account. Because if you're practicing proper risk management and you're using the correct lot size that is pertinent to your account size, then 3 trades a week, if you can make 3 trades a day, sorry, at 1% to get 1%, it's 1% on whatever your account size is. So your trading doesn't change. If it takes you 3 trades to make 1%, whether it's a 1,000 account, a $10,000 account, 100,000, it's the same 3 trades. It's the same 1%. The numbers are bigger because it's 1% of 10,000. It's 1% of 100,000. But the trade's the same. It's 3 trades. If it takes you 3 trades to make 1%, it's the same amount. All right, guys, let me quickly run over this. This is going to be one of the boot camps, but I wanted to show you this first, and then I'll go over the I'll go over it on the live screen. So on our EMAs, guys, can everyone see that?
Yes.
Okay. So what are EMAs? So EMAs stand for exponential moving average. Okay, they're technical indicators. We have several of them in Sniper Pro. Some of them you can see and some of them you can't see. The ones you can't see, you don't have to see them because they're built into some of the other things that you can see, like the scorecards, like the trend screener and the Sniperlator. They all use EMAs. Okay, it's a technical indicator and it smooths out price data and identifies trends more clearly. So again, in the old days, we had to use a lot of trend lines and looking where support resistance was. And, are we in an uptrend or a downtrend or whatever? The EMAs help us with that. Okay. And how it works is the EMA actually gives more weight to recent prices. So how the settings on the EMA work, the smaller the number of the EMA, the faster they work. And the Sniper Pro EMAs, my fast ones, the ones behind the candle, are faster than anybody else's in Sniper Pro. I'm not saying in the world because anyone can put those in. Okay. But they're faster than the simple moving average because the simple moving average, the SMA, treats all prices equally. We do it with our EMAs because they give more weight to recent prices and that makes them more responsive to recent price changes. And that's useful for traders who want quicker signals, not just longer term. I'm going to go over those again. This is only a few slides, guys, and then I'll show you on the charts. Hold on, what's going on here? Why am I moving? Something is not right here. Let's go down to the next one here. Okay, so why traders use the EMA? Because it's very good for trend direction. If the price is above the EMA, the market is often in an uptrend, and below it suggests a downtrend. Remember, with Sniper Pro, we want several things lining up. We don't rely just on the trend screener. We don't rely just on trend lines. We don't rely just on EMAs. We don't rely just on the Sniperlator. We want to build them all together. Okay? The scorecard does a lot for you automatically. The numbered scorecard, obviously, the higher the number, once you get above about 7, then it's much more powerful. On back testing, we found from 3 to 6 or 7, there's actually not much difference. But above 7, it gets very, very nice. And so what we look for on our EMAs, we look for crossovers. And that might be a crossover of a shorter term EMA crossing a longer term one. It might be candles crossing them. That's the most common one. It can be a Sniperlator snake crossing them down below, etc. But the one thing a lot of people miss is that EMAs often act as dynamic support or resistance zones. What that means is when price approaches any EMA, you should have finger on button because we might not break through it. Or we might break through it a little bit, but then it'll reverse immediately after. Don't forget nothing. If you see an EMA right on the 21,000 mark, it can still go through it a few pips before it turns around. Don't get fooled that all these are set in stone. Our reversal areas on the Bollinger Band. That's why we have 3 of them. We don't know whether it's going to reverse on the inner, the mid, or the outer one, or it might even break out of all 3 of them first before reversing. All we know is we're in that zone. And so we got to be looking at these things more of zones than hard and fast numbers. Okay? And then these are the common EMAs that a lot of other people use. They'll use the 9 or the 10. They use the 20 or 21. A lot of people use the 50. Ours is 55. Why is it 55? Because 55 is a Fibonacci number. Right? Who knows all the Fibonacci numbers? Anybody? Anybody? Write them down. 5, 8, 13, 21, 34, 55, 89, 144, 233, 377, 610, 987. I know you didn't write them down. You don't need to. All those EMAs, by the way, all those numbers are actually built into our trend screener at the top of the page. An EMA number is simply one number added to the next number. So you start at 0 and 1, and you go up from there. Then you get 1 and 1 is 2, you get 2 and 1 is 3, you get 2 and 3 is 5, you get 3 and 5 is 8. See what I mean? 8 and 5 is 13. 13 and 8 is 21. See how it goes? They're Fibonacci numbers. Just simply adding the next number, the two previous numbers together to get the next number.
I can't see that. Sorry.
That's okay. And they're very, very powerful. They're very, very powerful in nature. I'm not going to go into great detail, but just look up Fibonacci. Look up Fibonacci in nature. It's in sunflower seeds. It's in snail shells. It's in all kinds of things you couldn't imagine that these numbers show up in. And they show up, and what they are is they're ratio numbers. And they're very, very powerful in trading. So that's why I don't use, if you can see an EMA of 9, you know there's no Fibonacci number of 9. What's the closest Fibonacci? It's 8. EMA 20 or 21 is going to be 21 because 21 is a Fibonacci number. 50 is not, so the closest one is 55. I call that Jim's EMA because he loves the 50. We've been trained to use the 50 EMA in other scanners, and I'll tell you why in a minute. And the 200, a lot of other people use that. We use the 233 because it's a Fibonacci number. Okay, so Sniper Pro has 5 EMAs just built into the chart, and I'll show those to you in a minute. But we use all the Fibonacci numbers from 5 to 987. All the numbers I just called out are all used in Sniper Pro. You can't see them. You don't need to see them, but they're all part of the calculations going on in the background on Sniper Pro, which is what makes it so powerful. Okay? And how do the EMAs help? Is that my last screen? No, I've got one more to go, and then I'll show you what they look like. Okay, so the reason is these EMAs help all styles. The fast-moving EMA cloud, that's the one behind the candles. It changes from red to blue. It's 2 lines. And when they interchange, they change from red to blue. That's the fast-moving one. That's going to help you, especially scalpers, because it changes very, very quickly. Faster than anybody else's. Very, very good for scalpers. But it is also good across the board because it is candle by candle. Okay? So it identifies those trend shifts quicker. And obviously, as you know, when it's red, it's heading down, blue heading up. Very, very easy. The mid-level EMA, which is Jim's one, the 55, that's the medium trend, and it's good for swing and day traders. That's the one that changes color. That's the single color one that changes from blue to red. If you're looking at a safer entry, then you can wait for that trend line to turn the color that your order is in. So if you're in a buy, you want the candle to cross that line and turn it blue. And then that can be an entry. It can also be a re-entry. So if you got in earlier when the fast-moving EMA is crossed, and or the trend direction on the sniper later turned the color, or you got the scorecard, or you got the super sniper arrow. Don't forget, we want to layer these onto. The more we layer on top, the better our indicator, our signals, the stronger our signal is going to be. Okay, but the mid-level EMA will often be used much more when you go up in time frame. So for instance, if you want to get more into day trading and you want to be trading on the 15-minute or above, you're going to be looking at the 1 hour. You'll probably be looking at the 4 hour for overall direction. Drop down to the 1 hour to see where our entries might be, and then you're going to trade on the 15-minute. Then that medium level EMA is going to be much, much more important to you. All right. Final one. The purple EMA is a longer term indicator. It's often used by institutional traders and position traders. It's the purple one that you see on the screen. Now, again, when we see that, when we see price approaching the purple, is it going to hold the price up or is it going to break through it? All these EMAs, we're always asking the same thing. But certainly the purple one and the gold one, we're definitely asking those because they will more likely be support and resistance for you. The golden EMA is often a magnet. What does that mean? Is as price moves away from the golden EMA, you've got to have it in the back of your mind that it is likely to move back to that golden EMA. How does that help you? Well, if you moved away from it and you get signs, let's say you moved away from it in a sell, in a bearish pattern, and then you see a change, you see a reversal happening, and we start going bullish and going up towards the golden EMA, what does that mean? That can now be one of your targets. Correct? So that's why the EMAs are very, very important. Does that make sense to everybody? Let's go and have a look at some.
Sense.
Actually, yeah, sure does.
Does that let me where's James, Tony? What's he doing?
He's actually showing a house right now.
Oh, is he? Oh, okay. All right. Can't get angry at him for that then. So let's have a look at, let's see if I get it a bit clearer on the 15-minute. Doesn't matter, I'm just looking for more clarity than anything else. So very easy, you know all this stuff. I'll zoom right in first. This is our fast moving EMA. You can on Zoom, you can see that cursor, right? My big yellow hand.
Yes, thanks.
Okay. So that blue cloud, we call it, is the fast moving EMAs, and they're always going to be behind the candles, but they're very fast moving. And again, because it's all color coded, blue means going up, red means going down. When you have a crossover, that's a reversal. We actually got Emma's golden candle right here, funnily enough. There we go, Emma. Happy birthday. There's your candle, showed up right on time. Big
Yay.
volume. Big volume. Red super sniper arrow. Emma's golden candle, reverse. And right underneath that, we went from blue there to red there. We did actually pop back up again before we continued. But even if you got on that, obviously we've gone down. You know, you're well in profit. No big deal. You never would have hit your stop loss. Your stop loss would have been up here somewhere. Nice reversal candle. Red super sniper arrow. We did get fooled a little bit here because it did turn red here. We did get divergence. What does that mean? When we're going up, we get divergence. We know it's going down. So we did get the heads up. We're overbought there. Snake changed from blue to red. We got our bullet points there. 1, 2, 3, 4, 5 bullet points. Oh my dear. Can't make this stuff up, guys. This threw us off a bit because we got our red. We would have got in on that candle. Then they turned blue again. But by this time, we still got red arrows. We got the PSARs above. We're not that worried. Even with this blue candle, we still got a red arrow. Not that bothered because snake is still going down. And now we got 1, 2, 3. Now we got 4 bullet points. We got 5 bullet points. Once we got back on track here, red arrow, red candle. Don't forget we're on the 15-minute, guys. PSARs are still above. Now we can start trailing our stop loss down on our PSARs here. So, you know, our stop loss can start coming down with us as we go down. Now we're back on track. Red arrow, red candle, red on the trend direction. It's right above that candle there. So our stop loss is already moved down to here. And as we move down here, we're moving our stop loss PSAR above each candle. PSAR, 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 PSAR. Okay, we are flattening out a little bit here, guys. Why? Because we're oversold. Remember, we're combining all these things. So although I'm talking about EMAs, we've got to combine all the other things in it as well. So we're oversold, but we're still red. We're still going down. We haven't hit a stop loss. We're still going down. Anyway, I digress. So that's our first EMA, fast moving. Here's our second one. This is our trend level. Changes from blue to red right there. If you were, and why this is important, and a lot of people like this, is because when you were up here and it was blue, look how choppy it got. Yes, you got a reversal candle. Yes, you got a super sniper, but we chopped in and out. We got a little fast moving EMA cloud turn blue. We got a blue candle. We got a gray candle. It's all very choppy until we go through the EMA, the 55 EMA, and when it changes red, we are absolutely golden.
Across the EMA.
See, changes red behind there. And we're still red here. A little bit longer. The snake crosses the 50% range right here. So we're nice, nice, nice. Going down. That's what that EMA does. So now let's zoom out a little bit. Now we're looking at this possible purple as a target. We've got a +1 here, a +5 scorecard here, and it's blue, but you know we can't take it because this is all red. So as far as we know, we're still going down. The PSARs are still above. You know, this would be one of our next targets. Well, you got lots of targets here. So again, we're popping our targets in here on the S1. We're putting a target on the S2 right here. Oh, come on, guys. Putting our target on an S2 right there. We're putting a target on the S3 right there. And we're putting a target on our golden, our purple EMA right there. So if this carries on in a downward trend, these would be our TPs right here. Again, they're not painted by Sniper Pro right there because this is, don't forget, this is a beginner strategy. The scorecard is going to give you an idea. And when we get the scorecard, we know we're looking for other things. We know we're looking for blue arrows, blue candles. Number one, it's not there. We know we're looking for fast moving EMA cloud to turn blue. It's not there. We know we're looking for the trend direction to be blue. It's not there. So, you know, all of us on this call know we're not taking this buy because there's just nothing to get in on.
Right.
So if we turn around and this starts heading down, these are our potential targets. And this is how we start getting into longer term trades. Don't forget we're on the 15-minute. So if we start seeing these turn down, we can start placing trades with these as our TPs. That's how you start doing longer term trades, longer time frame trades. Okay, does that make sense? Does anyone have any questions over that? And to further reinforce it, look, you've actually got another S4 down here, right here. So, you know, the fact that, you know, how can it go down that far? Come on, guys. It may not. That S4 is right in the middle of that big banking level right there. See this blue line here? And that's the 50%. It's right in the middle of there. So we could easily go down to there. You want to take numbers on this one. We're on the NAS 100. Just see if we start looking at any of these levels down here. And look at our magnet where that is. That's sitting right on an S5, guys. I would not put money on that not happening. And now, if these, now don't forget, we've got to get a lot of indicators lined up to get us down here. But if you know this could be your target, you're going to be at this stage here, you're going to be less likely to be surprised if it starts heading down. Now we're in an overall uptrend here, obviously. We're bullish here. We are pulling back here. How far this pullback goes, we don't know. Might just come down here and then shoot back up here and go through R1, 2, 3, 4 up to TP1, TP2. We don't know that yet. Right now, it's not a buy. You know that. But we are oversold down here, so it's not outside the realms of possibility that it will turn down and head up. First of all, we got to break that retest area right in there, that blue area there. And we're going to start breaking these pivot points here to go up before we can hit TP1. So we've got to keep an eye on that. But that's how you use, if you go to a higher time frame as well, again, wow, look at that. That purple is right on where our golden one used to be there. And now look, there's our trend line. See, it's blue. So this gives you an idea. We are in a bullish movement, bullish, trending, very strong. This right now is just a small pullback. Yes, we got divergence. We pull back and we have our red trend direction here, but it could still turn here. That's why the higher time frames are very important, because we want to see what's happening. Don't forget, we're probably hitting all-time highs over here on NAS. This is an all-time high, Jim. I don't know whether Jim's still on. Is that an all-time high, Tony?
I think the S&P hit all.
Yeah, it's all-time high.
Yeah.
It is, yeah. I know the S&P 500 hit an all-time high, so I'm sure this is an all-time high as well. So, we expect when we hit these kind of all-time highs, we are expecting a pullback. And, whether we're going to take another run up at it to go higher, we don't know. Don't forget, a lot of this can be attributed to, what's happening in Iran and with Israel, what Trump is saying over in NATO, what Fed Chairman Powell said today at another meeting in front of, I think it was the Senate today. So, all this can have an effect on this. This is a 4-hour. So, we're going back to the beginning of the week here, Monday, and the attack happened Friday. So we go back to Friday. Let's see, Friday. Yeah, we had this pullback here on Friday. This one going down here. It was all the war stuff, Iran and Israel. But once the dust settled and it looked like Iran is not going to retaliate in any significant amount, we started just heading straight back up again. World War III is averted, and we can get back on with seeing how much tariff business comes in from Scandinavia. So we're at the top of the hour, guys. Is everyone clear on the EMAs? They're very, very powerful to understand. So I don't want to, that's why I spent some time on this. I will, like I said, I will put that in the boot camp. So we do have that ready for us. And let me stop the